welcome to today's Lawpath webinar, Personal Services Income Rules, when the ATO treats your business like an individual. I personally have been looking very forward to today's subject, so hopefully by either myself and everyone else can glean some solid information from today. My name is Joel Comerford, for those who don't know, and I am your Lawpath webinar host. If this is your first time joining us today, thank you so much. It's a pleasure. And for all those familiar names and faces out there, thank you so much for joining us again. So let's start with why this topic matters. Every year, thousands of freelancers, consultants, and sole traders run into personal services income. Now, these rules usually come without even realizing that it exists. The ATO applies these rules when most of your income is tied directly to your personal effort or skill, meaning clients are paying you, not your business model. And here's the catch. The ATO can deny your deductions, ignore your business structure, and tax you as an individual, not as a business. This can lead to higher tax bills, nasty compliance issues, and even audits. In fact, a recent ATO report flagged PSI as one of the top triggers for small business tax reviews. So just repeating that, the ATO flagged PSI as one of the top triggers for small business tax reviews recently. That's terrifying. For all you small businesses out there, I take my hat off to you. The amount of rings you guys have to jump through, and then with these kind of things on top of it, I can't imagine it's an easy run. So you certainly have my respect. Now, I guess before we really jump into it, if you guys would like to just go ahead and throw into the chat, who here is running a business as a sole trader, a consultant, or underneath your personal brand? Okay, a lot of sole traders. Right. Now, be honest, how many of you have ever paused before hitting submit on an expense and thought, wait, can I actually claim this? If that is you, you're not alone. You're not alone. Now, we're very selective with how what kind of webinars we're doing. Sometimes we'll refresh some we've done in the past, but we're usually choosing webinars from a lot of the information we're getting from clients, especially in the case for accounting and legal. So PSI seems to be a reoccurring theme for us at the moment. So certainly, guys, you aren't alone if if you're sitting within that example. And that's exactly what we're going to unpack today in relation to PSI. So by the end of this session, you'll know exactly where you stand and how to protect yourself. Now, today we're joined by a very special guest, Timothy Quinn, our head of tax and accounting at Lawpath Tax and Advisory. Tim is a chartered accountant with over 18 years of experience advising businesses on tax planning, structuring, compliance, and financial strategy. He's worked at the director level, led tax divisions, and helped hundreds of businesses optimize their tax position. Tim is passionate about cutting through complexity so business owners like you can make smarter decisions with confidence. He will be discussing what PSI is today and how the ATO tests for it, how the results test and unrelated clients test actually work, which deductions you can still claim if PSI is applied, smart structuring moves to avoid PSI pitfalls, and what the ATO looks at during a PSI review and audit. So by the end, you'll walk away with a PSI checklist, a self-assessment flowchart, a much clearer idea of how to protect yourself, and from the unnecessary tax headaches. Plus, stick around as well until the end for a free consultation and exclusive attendee only offer. So we'll go ahead and dive in now. Tim, if you want to take it away.
Thanks very much, Joel. Always a pleasure to speak to everyone. Like Joel said, new friends and old. I see lots of the familiar faces, familiar names popping up in these. I really enjoy the chance to talk with you guys about tax. Not everyone likes talking to an accountant, so the fact that plenty of you have taken the opportunity to do so, my hat goes off to you. So let's talk about this PSI. Now, Joel's already touched on this. The ATO cares a lot about PSI. I'd say it's probably the number one compliance issue that comes up for my clients. It's the ones that we get the questions about, and it's the ones where sometimes the answer isn't clear. Now, why does the ATO care if your income is PSI or not? Surely all income is income. It all gets taxed in the end, right? Why do they care about what sort of income it is? Well, the fact of the matter is, in Australian tax law, not all income is created equally, and it's not all treated the same way. There are two particular types of income that Australian tax law likes, as in it gives you lots of tax concessions. That is enterprise, which is business risk taking, and investment, to putting money into things to build future income. There is a very deliberate choice by parliaments over the decades, the hundreds of years now that we've been going to promote those sources of income and give tax concessions. Now, the PSI rules are what we call integrity measures. So these are rules that say some enterprising small business person out there or some fiendishly clever accountant has said, well, I'd like to treat my normal, boring salary income as income from enterprise, as at-risk income. I want a piece of this action. I want to get the income tax exemptions and the tax exemptions and the tax treatments that come from taking business risk without taking the risk. These integrity measures, these PSI rules say, hold the phone. We don't care about your structure. We don't care about um, whether you're set up in a PTY limited or a sole trader or a trust, whatever it is. If it looks like a duck and it quacks like a duck, we're going to say it's a duck. We're going to treat it as if this structure didn't exist, as if it was bog standard income that you're going to get taxed on. So it's very, very important to stay the right side of these rules. You can take steps now for the future that change the way your business operates in quite small but significant ways in order to not get trapped by this. Let's dive right in. So PSI or personal services income is income that's earned from your personal exertions. So rather than the combination of your business structure, of your assets and your IP and your ability, that's a business structure. This is just from your personal exertion. For me as an accountant, actually, there's plenty of accountants that do get caught up in these rules. Am I going out there and just doing a job? Just basically like I earn an income, I get paid my day rate and I do it for one client. Is that really me taking enterprise risk? It's certainly different if I was setting up my own accounting firm. If I was setting up Lawpath Tax and Advisory and making use of employees and assets to run a business. That's what a business is, and that's when I'm taking enterprise risk. If I'm just going out with one client and but getting paid on a day rate, the PSI rules are going to be triggered, and they're going to treat me as if I've just been a salaried employee. So other sorts of industries that we do see this in really, really common is graphic designers and other sort of people that can sit in front of a laptop, a low I was going to say low skill. How rude to all the graphic designers. Low tools, low tool requirements. IT contractors are probably top of the list. There's lots of rules that apply to IT contractors. The ATO is very suspicious of you unfairly, I think. Consultants and engineers also get triggered as well. So, like I hinted at there, if your income is coming from the use of your assets, and if you're selling things, widgets, whatever they happen to be, you're not going to get triggered by this. As we go through the rules, look, they are complex. That's why I always advise getting an accountant, whether it's me or someone else, because they are the ones that will help you understand this in detail. But just have in the back of your mind as you're looking at these, am I taking enterprise risk? Am I really running a business here, or have I just set up a company to access a lower tax rate? If the answer is, well, it's really just tax driven, then you should definitely be cautious of PSI. So here are some examples. Now, these tests can be subjective, and it's one of those things where you weigh up various measures. Most businesses don't tick all of the boxes, and you don't need to. Some of them will tick some and not the others. It's considered as a whole. So what is PSI? It's, like I said, it's work that you are doing personally, you as one individual. Often you're getting paid hourly or daily rates. You're not getting paid to deliver a project. You're getting paid for 30 days work or whatever it may be. You're often going it alone, so you don't have someone helping out, or maybe only on the small admin side of things, but the actual thrust of the income is from your brain and your service that you're providing off the back of that brain. So businesses like we talk about, it's when you've got this structure that's combining different things. It's got certain assets, it's got employees, it's got intellectual property, and you're generating income that way. So, and like I said, often that we call it at risk because you're getting paid to achieve a result. If you don't achieve that result, it's on you to fix it. You might tell a client that, well, this is a 6 week project. If you're getting paid to deliver the project and you're into week 7, too bad. That's on you. So the government will reward you with some of the tax concessions from business income where it wouldn't reward someone that's just getting paid on a daily rate. So these tests, like I said, they're complicated. There's a nice little flow chart coming up in a little while that will help you. And as Joel mentioned, we do share these slides around to participants. So I do encourage you to come back to it because you're not going to remember it all now. Just as a quick overview though, when do these rules apply? What is personal services income? If more than half of your income is derived from your personal skill or your labor, then it will apply. And then we start to look at the various tests as to what that really means. So, like we said, these are things that are more commonly done by employees or traditional contractors that are just paid as if they were employees. So it's you that doing there, you're paid to achieve that result. You don't really have significant assets. You might have a laptop or something like that, but it's in reality, most of the value is coming from your personal service. And I like that last line. The client's buying you, not your system or your team's output. They're really just there for you. You're there for them. So once we determine if PSI applies, um, here's where we go into this flow chart. I encourage you just to have a quick look at it, and the only takeaway you need to know is that initial finding of yes, this is PSI is only the start of the story. That initial discussion of okay, well, the income I receive is personal services income. It's income from my exertion. That is only the start of the conversation. You then look at these additional tests. You look at the results test first. If the results test is passed, no worries. You're taking these enterprise risks. Even if the answer is no to that results test, there's a few more ways. There's 3 more ways and one more exemption that are the big ticket items. And we will gently just give you an exposure to some of those. Like I said, unless you want to go spend 3 years at university and then 2 years doing a CA and devoting yourself to this, you don't need to know all the rules. As a small business owner, you need to have an overall understanding, and then you need to employ someone else to look at this in more detail while you run your business. Why does PSI matter? Joel already touched on this, but it reduces some of your available deductions. So if the ATO turns around and says, well, this is PSI and you don't meet any of the exemptions or meet any of those extra, what we call the PSB tests, you are restricted. So you're restricted in the rent expenses you can claim, particularly if you're renting from an associate or someone that's related to you. General payments to associates like you might employ your spouse in your business. If you are a PSI business and you don't meet any of the extra tests, then you'll be denied a deduction for things like that. And this can really stop you from reducing your taxable income like you might have expected. Take a pause for a second. Why do you think the ATO doesn't want you to claim a deduction for payments to your associates? In reality, if you had this business that was really just your personal exertion, you didn't meet any of the tests, you might hire your spouse as a way of income splitting. The ATO does not like income splitting. They're happy with trusts that achieve the same result, but in terms of these sort of structures, they don't like you taking taxable income from you, who delivers the service, and passing it to someone on a lower tax bracket. So it really does change the tax treatment. It actually makes it a bit more complicated because particularly if you're a PSI, if you're earning PSI within a company structure, you have to do the whole company tax return and financial statements. You don't get away from that. You still have to declare these are my income, these are my expenses. You tick a box that says my income is PSI. So you still have to do all of that compliance. You don't get away from it. But the net result is that amount of money that is considered PSI income gets declared in your personal tax return. So you're not going to get taxed twice. You are going to be restricted from certain deductions. Whatever's left over, it goes, well, you as the director, you as the tested individual that's actually providing these services, you will be taxed as if you earned that money individually, which arguably, if you've gone into a tax-driven structure, removes the whole point. You've just got the added compliance burden with none of the cost saving. There are different rules about super and payroll rules and withholding tax. And often, because you are ticking this box that potentially says you've got PSI, but maybe we meet some of the exemptions, well, that is a little bit of a flag, particularly depending on the type of industry that you're in, the amounts of income that you're disclosing. All of these things go into the giant great ATO algorithm that makes it more likely that you'll get picked up for audit. And we don't like that. Even for people that are squeaky clean and doing the right thing, a tax audit is not fun. I speak from example, having just had my 2021 tax return audited. How very rude. We did mention these common industries, but it really can be anything. These are just the ones that the ATO puts out all of their warnings and advisories that are very common ones that that fall foul of these rules. So people, any sort of consultants, anyone that's sitting down there with a laptop and churning out a result for, well, churning out work for pay is often going to be triggered for that. The professions, very common, accounting and legal. And like we said, engineering and construction, consultants that are getting paid for their smarts and their know-how are very much top of the list. And likewise, those freelance designers that I think I inadvertently offended by saying they weren't skilled. They're, of course, highly skilled, but they don't need much in the way of tools. Medical practitioners, yeah, there's particular rules, and I know Joel's going to be upset. I'm not supposed to answer questions until the end, but yes, medical practitioners can get caught in that, up in that, and they've got particular rules about service entities which are sort of very similar in that regard. Let's go through some of these tests. Again, you're not going to remember it all. Maybe you'll watch this on repeat on YouTube. It'll be top of your favorites list in your browser. To avoid this treatment, okay, we've hit the first hurdle. The first hurdle is we've admitted, okay, more than 50% of our income is PSI. It's from personal exertion. Like I said, it's not the end of the story, it's the start. We've got the results test, which is first and foremost, and if we fail that, we look at one of the other three tests with a particular addition to those three tests that I'll go into. Or, of course, you can always get a determination. A lot of small businesses don't go down this path, but you can actually appeal to the Commissioner of Taxation and or one of their many deputies and apply and say, well, I don't actually meet any of these tests, but hand on heart, this is personal, this is enterprise risk. This is a legitimate business. You state your case and you might get a determination that says you are a PSB. It is difficult to write those, speaking from experience, and it's expensive. So not many people do, but it's always an option too. Much better to just pass the tests because certainly at Lawpath, our accountants will do that test for you for free. So we assess all of our clients for PSI and PSB straight out of the gate. It's one of the first things we do when we onboard our tax clients here. So the results test, it says preferred by the ATO. It's fine. That is true. It's the first and foremost test in the legislation. If you meet it, you forget about the rest. It's probably the most subjective of the test. It's the one that requires you to balance up a few different factors. But broadly, you will pass this test if you are paid to produce a specific outcome. That's why it's called the results test. You're getting paid for a result. You're getting paid for a particular project. That means how you deliver that project is really up to you. That's the definition of enterprise risk. You're bringing your own tools. You're doing your own team. You're doing whatever it is. The person that's hired you to achieve this result doesn't care how you do it. They don't care if you're working 12 hours a day or if you're doing six. They don't care if you finish early, congratulations. If you finish bad, too bad for you. You're getting paid to really achieve that specific outcome or result. And if you stuff it up, that's on you to go and fix. So that's a very, very common. You can see that a lot of small businesses will meet this. This is the reality of small business. This is not a terribly difficult result to achieve. If you are a legitimate business that's going out there doing these things, as opposed to just probably a bit of a sham organization that you've set up to reduce tax, you're pretty likely to meet this test. And it's the strongest indicator, really, that you are out there operating a real business. Okay, you don't meet that results test. That's all right. That's all right. We've got three other tests, and this is sort of modified, but why we call the 80% test, but which we'll go into that as well. But the unrelated clients test is straightforward. If you've got two or more unrelated clients in a tax year, and you're getting those clients doing direct outreach or advertising, then that's fine. You'll meet that as well. Now, this doesn't mean some people's brains are whirring. I can tell. Probably James from my team is thinking a very clever way around this. You just find an employer that has two related businesses. Certainly, most company structures have got two or three. Oh, just do a business for all of them. No, they are not unrelated clients, and you're not receiving those offers because you've put yourself out there. You are really, if it's a word of mouth referral, and if they're not really unrelated, you're going to fail that test. So nice try, James, but you're not going to hit it. The employment test. This is another way, another nice one. It's pretty simple. We talk about this idea of enterprise risk, of taking risks as a business. What's riskier than hiring employees? Everyone's got a horror story. I certainly do, not from Lawpath, but everyone out there has taken a risk by hiring someone else to help you do this work. Well, the ATO and the tax legislation says if you meet this test, okay, you are a business. If you're hiring a fellow consultant to work for you and they're doing more than 20% of the principal work, so it doesn't mean you get to hire your partner to do the books or do some doodling. We mean the actual thrust of your business, if they're involved in at least 20% of that, or you have an apprentice for at least 6 months, then you're going to meet that employment test. Interesting carve out for apprentices there. It doesn't really meet the rest of the employment test. It's a nice little add-on though. It's a nice reference out there to tradies who it's almost like a historical touch point that tax law has always been a bit favorable towards tradies because we know that the work they do is important. We know that the apprentice schemes are important. So we're giving you a little nudge there. Take an apprentice on board. It's a nice shortcut to making sure you get extra tax deductions. And just a reminder, that work is principal. It has to be the actual direct, the earning of the income, not just little bits of side auxiliary services. The business premises test. This is probably the one you see least common, particularly in today's age. The business premises test, if you have a dedicated premise, so not just a home office, not something like that, and if you're using this space exclusively to do your work, and it's accessible to the public or clients. So you've got your logo up on the door, you'll take meetings in there and things like that. Um, they say, well, again, you're taking business risks by having this. It's a way of presenting yourself out to the world, or certainly to your local area, saying, this is my business. Let's do work together. Why I say it's the least common one? Well, I know from my client list it's the least common one, but it's becoming increasingly uncommon for businesses, large and small, to actually have business premises. So if all you need is you and a few mates and a laptop and a couple of laptops, you can do that from a WeWork or an equivalent anytime, or you go out to the coffee shop, you often won't have a business premises. And why it's also uncommon is if you're big enough to need a business premise, you're always going to probably have hit the other tests. So that's why it's considered the less common one. And just a reminder for those questions that are coming through at the moment, we will have a Q&A session at the end of this and we will come back to them. So you're not being ignored, you're just being gently deferred And just like we like to defer tax down the line, we like to put the questions down the line as well, deal with them all in one full fell swoop. What happens? So you didn't hit one of those tests. Commiserations. So it's important that you do this assessment early because if you do it late and you've been making investment decisions and things like that, assuming that you're going to have access to all of the deductions available to you, you're going to get a rude shock. So if your accountant tells you early, sorry, mate, there's no way around it, you can do a couple of things. You can just cop it sweet and say, oh, that's all right. I get other benefits from being a company anyway. I get benefits from asset protection, things like that. Or I just like to be a company. It looks good on a logo, looks good on my ABN. That's fine. You just limit your deductions. So your accountant will help you by picking out, well, we're not going to get a deduction for the rent, for the travel, and those associate payments here. Um, with some exemptions, they'll help you work through that. Unfortunately, and this is probably the step that is most often forgotten, because that income is going to be attributed to you as an individual, you are actually supposed to register for PAYG withholding and withhold tax on that like you do for your employees. I'd say it's vanishingly uncommon that I've seen it. A very, very common issue with clients that I've picked up that have had other accountants and the accountants just haven't bothered. Of course, it is compulsory to apply PAYG withholding, so there's always a risk that you get hit with some extra fines or penalties for that. But hey, maybe we take a pause, particularly if you're early days. And this is why it's so important to engage early and with an accountant that is accessible to you, not just looking back at historical stuff. You can restructure your business. Um, you might have just signed up on a daily rate thing because you weren't thinking too much about it, and it's just what you're used to. You might be able to restructure potentially your existing arrangements or future contracts to make sure that you do trigger that results test. It might feel like an insignificant thing to change your contract from, well, I know exactly how this project is going to take me 6 weeks. So why get paid for 6 times 5, 30 days? Restructure the agreement. Put in some clauses. Speak to a lawyer, particularly at Lawpath. You've already got us to do your accounting. Consult with a lawyer who will help you design your contract in a way that won't trigger these tests. So now's the time to do it. It's like with all tax issues that you've come across. The best time to do it is from day one, and the second best time to do it is today. So what are those implications? We've sort of touched on them before. There's that restriction on what you can claim. Of course, you can still claim plenty of other things. So your standard business deductions are still available to you. There's just those carve-outs. Losses from these PSIs cannot be offset against your other income. So that's a tricky one as well. If you've got income from PAYG salary from one person, and then you've got this what we call quarantined loss from your PSI, your salary income, you can only offset against future PSI income. We touched on the PAYG withholding already. We've touched on the fact that it's going to reduce your tax minimization options and also increase those little red flags that add up to your audit risk. So how do you stay compliant? First of all, you get someone to assess. Don't bury your head in the sand. Don't leave it like some people do until it's too late to fix and until you've already made the decision, assuming this is going to be your taxable income. Get the upfront advice. Make sure everything's documented. If you can point to a contract that says, I'm getting paid for a result, that's the end of the story. Make sure it's clear on your invoice. If you're getting, it doesn't matter necessarily that you're getting payments towards that. Interim billing arrangements are fine as long as that invoice is clear that it's towards a result and it's milestone invoices, things like that. Totally fine. Don't put hourly rates. Don't put day rates, and just structure your agreements to really generate that result on the results test. You can always think about subcontractors. I think one of the questions come through has said you can hire subbies to help you out in that. You certainly can. Great idea if you can afford it. And of course, always use professional advice. Don't try and interpret it from the ATO website. I'm a great defender of the ATO, and I think the people that work there are very clever and hardworking, and I think their website is atrocious, and some of the information they put out is incorrect. So talk to a professional. The ATO don't make the rules; they are just enforcing them in a way to protect the general revenue, and that is not a slight on them. Good documentation is fantastic. Anyone that comes to listen to me all the time is sick of hearing me rabbit on about it. They probably think I'm a bit of a stickler. I get it. No accountant expects perfect documentation, but the more there is and contemporaneous, so at the time that you're actually generating this income, the more you can point to, it's just a nice big tick. When a client sends me, here's the contract, here's the invoice, it's a no-brainer. We don't have to look any further. It's a nice, easy outcome. So keep that documentation at the time, particularly if you're meeting some of those more little wobbly tests about needing to have unrelated clients and proving that you've done advertising. All right, show me the link, take a screenshot from Seek or wherever you've put it, Yellow Pages if that website still exists. Um, just keep the documents and share them. Don't lose them. If you are restructuring, we talked about this as well. The agency model is the one that we haven't thought about yet. The agency model is almost an exemption to these rules, and we've got a few of them at Lawpath as well, that says, well, if I'm acting under this agency model, I might only have one contract that says, well, this I'm getting paid through this one group. But what I'm actually doing is achieving through this agency model results for lots of different groups within it. There is a common sense approach here that says, well, if you qualify under these agency rules, we'll look through that agent and basically say, okay, forgetting about the fact that you're getting payment through one group, you are actually doing work for lots of different people. So that's a nice little extra one as well. Developing assets and IP is really hard to prove, but if in the traditional model, particularly for software consultants, this is a good one that says, well, I'm not being paid to develop code for someone that they keep. That's very much pay for service. If I'm developing code for myself, for my business that I own, and I'm licensing it to people, that's a business because you're developing assets there as opposed to just selling your service. So that's one of the things and it's not just for software. If you can think of any sort of small business consulting where you're developing IP for someone else, that might be PSI. Developing the IP for yourself and licensing it is very unlikely to be PSI. We talked about these audit triggers as well. It's the usual ones. It's the more you earn, the more likely you are to get audited. In particular, if you don't have any evidence of PAYG withholding, and there's plenty of things in a tax return. If you've ever looked in detail, purpose of a tax return is not just to calculate how much tax you need to pay. It is chock full of disclosures, and that the sum total of those disclosures will add up and make you more likely to be audited. So here are some case studies. I think they look very familiar. They're probably straight from the ATO website or from some of their many, many, many public rulings on this matter. So if we think about an IT consultant, he's got one client earning $180,000, buy an ABN, fantastic. How clever am I? I'm going to get all the deductions of a business with none of the risk. No, that is the classic example of PSI, where you are limited in your deductions. You must withhold PAYG, so you're not getting a tax holiday there either. And ultimately, regardless of whether you're doing it by an ABN or via a company, so a sole trader ABN or a company ABN, you are ultimately going to get taxed on it as if it was yourself. So if you were thinking that you could push some money out to your spouse or just park it at the small business tax rate of 25%, alas, no, it will be declared in your personal tax return. Here's a bit of a different one though. You're a marketing consultant. You're out there. You've got your website. You've got a bit of a name for yourself in the industry, and you've got three unrelated clients. Don't know each other. Wouldn't know each other from Adam, and you're getting paid to do project work. Well, that's a classic example of passing the results test as well, actually. So you're passing the results test. You're passing the unrelated clients test. not that you needed it. You're well and truly comfortable being a real business, not triggering the PSI. Final takeaways. We're already at that stage of affairs. That's why I've tried to run through it in a little bit of a quicker time period. So we've got lots of people on the calls, lots of questions today. So let's jump into them once we've just given you the takeaway. I'm going to be repeating myself. I apologize. The key thing here is the results test. You can forget everything else I've told you if you meet the results test. None of it's relevant to you. It's the first and foremost one. If you're getting paid to achieve a result as opposed to being on the clock, you will meet this. If you've got unrelated clients that don't know each other, you're out there advertising your services, or you're coming from a business premise, you've got your legitimate office, you're out there doing it, or you're hiring employees, you got 20 to do your principal work, 20% of it at least. Fantastic. These are all ways that you can miss the issues there. As usual, the final takeaways are basically always the same. Ask an expert. Don't be expected to learn all this yourself. Have an understanding broadly. Know the questions to ask if you've got the sort of accountant that is not proactive, but is only reactive. Know that you're going to have to bring this up if they don't. Understand your structure. Understand the way you bill your customers is very, very important. And keep records. Always the same. Might pass you back to Joel just for a minute before we go into the Q&A.
Forgive me. Thanks again, everyone, and a big thank you to Tim for breaking down a topic that trips up so many business owners. I'd say I speak to at least 12 to 13 people per day who usually ask us about this, and then we have to relate them and confer them over to Tim and his team. So, um, show of hands, anyone in the chat who's actually never heard of PSI before now. I wouldn't be surprised if it was a majority of you guys if you are a new business, because it just seems to come out of the blue. Just to, I guess, reiterate one last time what Tim's mentioned and what we've learned today. Even if you operate through a company or a trust, the ATO might still treat your income as PSI. If that happens, deductions can be denied and you could face unexpected tax bills. Whether PSI applies depends on tests like the results test or the unrelated clients test. And failing those tests means reporting your income differently and adjusting your filings. The kicker, many businesses are making mistakes right now without even knowing it, as I mentioned earlier. So one of our clients, a designer working through her own company, thought she was compliant, but when we reviewed her records, we found she failed the PSI test, was claiming deductions she wasn't entitled to, and was exposed to a $12,000 tax liability. And after working with our team, we cleaned up her records, adjusted her structure, and got her fully compliant. And now she saves hours and months with a peace of mind. We have so many lovely stories like this. This one was a recent one. We have all these wonderful testimonials as well. So if you guys are dealing with something in relation to PSI or something else and you're not sure whether or not we can assist you, always feel confident and free to give me a call and or just go on our website. We have so much data on how we've been able to assist businesses and what kind of efforts and support we can provide you as well. Now, in relation to some of the services that we can provide, if you are new, I have on the page there my recommendations, and essentially the two that come to mind are our accounting and tax plans. So, how does the accounting advice fit into what we're discussing today? The key with PSI is demonstrating that your business is not simply you providing personal labor, but that it operates as a genuine business. Now, our accounting advice plan gives you ongoing access to senior accountants like Tim and other members for those who have participated in the past, Pradi, for example. These gentlemen will provide you business structure analysis. So your business will have a review, whether you're set up as a sole trader or a company or a trust, that will determine whether or not it passes a PSI result test and ATO scrutiny. For example, a company structure with multiple clients and proper contracts can help demonstrate that your income is business income and not PSI. We have the tax planning and minimization. If PSI does apply, they'll ensure you maximize allowable deductions and explore legitimate structuring options. And then we have ATO and ASIC support. So if the ATO queries your PSI position, you'll have accountants from our team who can respond on your behalf and manage compliance. And then we have the bookkeeping and payroll setup. So proper payroll and invoicing systems help distinguish your business as an enterprise rather than as an individual service provider. And then we have cash flow and performance tracking. Ongoing reviews means you get caught, you won't get caught by PSI surprises at the end of the year. This plan is very proactive. It's about ongoing advice so you're structured correctly before issues arise. And by ongoing, I mean you get unlimited 30-minute calls every day whenever you choose. So if you feel like you wanted to have some questions answered, even if it's 2 minutes or a long-winded response, you don't have to worry about paying each time, and you don't have to worry about waiting 3 or 4 or 5 days to get a response. You can just book a call right then and there with your chosen accountant from our team. The next plan is the tax compliance plan. So once your structure and strategy are in place, the ATO still requires annual lodgements and ongoing compliance. This plan ensures that you don't trip up on the execution side of PSI. So our annual tax return and your 4 BAS statements per year lodged by a dedicated tax agent from our team who ensures your return correctly categorizes income critical to PSI disputes, prepared financial reports, so cash flow, P&L, and balance sheets prepared in a business-like form. Other ways, which is another way to demonstrate the business structure and avoid PSI application. We have proactive deadlines and reminders on the tax plan as well. So PSI often becomes an issue when the ATO reviews late or incorrect lodgements. So this plan can ensure that you are always on time, well ahead of the curve. And we have ATO representation as well. So your tax agent can directly deal with the ATO on PSI reviews or disputes on your behalf. So it's important to note this plan is only for businesses under 400K revenue. If you are within this range, it's perfect for showing that you're treating your business properly from a tax perspective. Where the accounting advice plan helps you set up and defend your structure against PSI, the tax compliance plan ensures that everything is correctly lodged and reported so the ATO sees you as a compliant business, not an individual trying to avoid tax. So this is the big brother, little brother, hand-in-hand plans that we have here over at Lawpath. For those of you who hear the name Law, just assuming we do law, no, we're an umbrella company now. We do pretty much everything. Both of these plans are individual, but if you want to bundle and save them together, we do offer some wonderful discounts, which we can assist you with ongoing PSI reviews, strategic structuring advice, and real humans, not bots, answering your questions when you need it. So your practical next steps, you won't leave here empty-handed, is what I'm saying, is you will get a email afterwards, guys, with the full webinar slides recap, as well as today's YouTube link. You'll get a PSI self-assessment flowchart, a mini audit checklist, are you PSI compliant? And we will have some wonderful partner offers for you as well. Xero, MyOb, wonderful partners. If anyone's looking to get into Xero, we have an offer for the first 6 months, 90% off, which is really cool. And then we also have GoDaddy. We have some wonderful Westpac offers if you're looking to register a company for the first time and not sure which bank to go through. If you are an accountant on the call who likes to register companies for their clients, we also have some wonderful offers for you as well. So by the end of today, log into your accounting software and ask yourself, what percentage of my income comes from me personally doing the work? Do I pass the results test? Am I claiming expenses the ATO might not allow under PSI rules? If you're unsure about any of that stuff when you go to have a look, don't leave it to guesswork. You can go ahead and type in yes in the chat if you'd like us to book you in for a free accounting consultation, or simply reply to the email that I sent to you this afternoon. And we'll be more than happy to get you on a call and see where you're at with your business. If you feel unsure about something, we can offer you some insight and guidance as well. Now, without further ado, let's go ahead and get into these questions. So Tim, if you just want to jump straight in, I'm sure there's some hungry people.
Yeah, we'll go back from the earliest. So if you've only just asked, sorry, we'll get to you, but we want to be fair. We just had an early question about the difference of paying a dividend as opposed to paying wages when you're a PSB, which is basically you've met one of the tests to be not covered by the worst of the PSI rules. It's a little bit off topic, Mary, but I would take that generally as the difference between dividends and wages. Wages are subject to withholding tax and are taxed in a particular way. Franked dividends, obviously, you're attaching some tax credit and it's treated individually to you that way. So, and no withholding. So I guess that's probably the biggest difference there, Mary, but not really PSI related. We've now got some questions about what about independent contractors without an ABN? Ooh, well, if you're carrying on a business, you should have an ABN, but I sort of see your point. Through labour hire agencies, and if your payment is arranged through PAYG as a contractor, again, a little bit off topic. It's one of labour hire arrangements are heavily scrutinised to see whether you are just an employee through this agency or whether you are a business. It's probably again beyond the scope of PSI. There are very particular rules about those arrangements. So Chris jumped in and said, yes, he went through a determination, which is what I mentioned. You can apply separately for a determination, and unfortunately, he was unsuccessful. Commiserations, Chris. They are very difficult to do that. Um, if someone's made the point, because we said very clearly that to hit that employment test, you must be hiring someone to do principal work. Adam's asked, well, what if the income is derived from that business admin being outsourced? I'd say deriving cost savings is not the same as deriving income. If your business was the provision of business administration services and you were getting that and selling that, that would be principal work. If it's just taking away from your load and allowing you to do more principal work, that is specifically not included by the employment test. So Adam, you bang out of luck on that one, unfortunately. Chris has come back again and said you might not know that you're a PSB until too late. Yes, again, very, very true. That's why you got to get ahead of it. Don't wait until you're doing your tax return for last year. Get ahead of this year right now. And someone's just asked to clarify, if you meet one of the tests, does that mean the income is not classified as PSI? Yes, it does. If you meet one of those tests, it doesn't have to be all of them. We must have an accountant online. We've always got plenty. I think Maru must be one. She's asked, oh, pardon me, she or he has asked for some feedback on PCG 2024 D2. That's a draft bit of a communique from the ATO that has been not particularly well appreciated and received by the tax community. What it says is, hey, you might hit some of these PSI rules, but if you've done this artificially, if you've deliberately triggered something, we're still going to get you. Don't forget, there's this Part 4A. There are these general anti-avoidance rules that just because you hit PSI, we can still hit you from these artificially derived arrangements. I think I mean, everyone knows, every accountant knows that those rules exist and that you can't just come up with these artificial structures that will save you. I think the contentious part about that draft ruling or that draft guidance is that some of the examples they give are pretty plain. They don't seem to actually trigger, in my mind, those Part 4A. So I think there's a reason it's still in draft. It's been sitting in draft for about 11 months, I think. I dare say they've received some strongly worded letters from people in the industry. So I think that probably covers your later question as well there, Maru. Rosie's asked about unrelated clients. If you've got a mix of income, some of it's project results based and some of it's hourly rate. Yeah, this is a tricky one, and actually this covers off a later question as well. What you have to look at is you gather up all of your PSI, so all of your income from your personal services. 75% of it or more must be from must be from this mix of must hit the results test, or alternatively, I think it's 75% of it must be from your unrelated clients. So if you do have a mix where some of your income is hourly rate, it has to be a small proportion. So it has to only be 25% or less. So I do recommend seeking a consult on that, or seeking some advice, because the devil will really be on the details. You do have to consider it on a source of income basis, not just on an overall basis. And that actually covers Lawrence's question as well. So we might be running low on question. Should a sole trader opt in for PAYG withholding if they're a PSI? Yes. Yes, you are required to, but we commonly see that you don't. So we've had a few more questions about, do you look at projects individually or the business as a whole? Um, you do look at both actually, depending on the test that you're trying to hit. You have to consider your business overall, and then you do have to consider it piece by piece, particularly if some of your income is PSI and some is not. You'll often consider the PSI separately, and then you'll look at, well, does 75% of your income meet these rules, meet these exemptions? Do you have a little bit of income that doesn't? We're okay with that. Does the main thrust? But you do also look at your business on in aggregate. So, David, I do recommend again that you seek some advice on that. Just some more questions about PSI medical practitioners. Again, I mentioned, I think earlier on, there are specific rules about very common medical structures, particularly medical practices. There are particular payroll tax implications and superannuation implications. Uh, so PSI does apply to medical practitioners, as do additional rules that seem very, very similar to that, and you'll certainly need specific advice in that as well. And I think Alexander, I'm not going to, let's call it Alex has asked, can you get a free consultation? I'll get Joel to reach out for you there. So, and we'll have a chat. Happy to give you a hand on that one. Charles has asked if all income is derived by one person, but I don't know if you mean by one client or one individual, but you would meet the results test. The results test is great. We love the results test. Then you're basically covered. But can you apply previous revenue losses in a trust? It's a few different questions there. I would say that it is still PSI. So even though you meet the results test, it's what we call personal services income, but you hit the results test, so it becomes PSB. Very confusing, I know. It is still PSI, so you can offset it against previous PSI. So you can use those losses there, but that's speaking generally, of course. Need to know your individual situations. Can PSI claim instant asset write-off, for example, a laptop? I would have to check. I don't know the answer off the top of my head. It feels like a no, though. Unless, oh, I mean, if you're a sole trader ABN, you can. So I'm going to change my opinion. You probably can, but you should definitely do your research there. Deep breath. I think we're at the end, Joel. We've still got a couple of minutes if anyone wants to throw in another curly one.
Just to reiterate, guys, we do have a free accounting 20-minute consultation for anyone who participated today. And we also have the exclusive discounts as well for most of our plans. So if anyone is interested in just having a general chat, you by all means, you can just go ahead and throw yes into the chat there, and I will prioritize you after this call. I usually will get around to everyone. Oh, perfect. I will get around to everyone, but I want to make sure that I'm getting around to those who actually have an immediate need and some burning questions they want to get through as well. And also, guys, I always like to say as well, a lot of the clients we're speaking to, and close your ears to the accountants listening, a lot are saying that, they often have to come to these webinars to get a little bit more information. And so I always like to say, if you are ever interested in having consistent communication with an accountant without having to pay each time or have to worry about getting a consultation in, we do have our accounting advice plan, meaning you can speak to one of our accountants from our team every single day. And you get to choose that accountant as well. So if you wanted to have more of a personal relationship with one, that's always going to be available for you. So, and to answer your question, VJ, yes, to anyone who did come late, or if you are new, I will be sending out an email afterwards with the link of today's episode, all of our offers, as well as the slides as well. Now, we have 4 minutes left. Does anyone have any final questions? Go ahead. You've got a professional here. He's answering free questions. So by all means, guys, jump in.
Or go and make yourself a sandwich. Not compulsory, completely up to you.
Oh, we've got Rosie. Here we
Yeah,
go.
Rosie's asked if you're now saying PSI in your next tax return, do you need to amend previous? Um, yeah, if you were previously earning what you now know to be PSI and you haven't declared it, you can go back and amend your tax return, and you will uh, by the letter of the law, be required to do that. If you find out that you've made an error, you can go back and amend. The ATO, I will say, and I've already dragged them for their website, which is unfair. They're people, when you talk to them on the phones, and we talk to the ATO every single day, they are understanding. They understand that small business is difficult and PSI is difficult. If you were to amend your tax return that on the result of you making an honest mistake like that and you've done the right thing to fix yourself up, they're going to be very understanding and forgiving. So I recommend doing that as soon as you do realize. Yeah, we have had another question. Can we amendment periods? You can go up to 4. The ATO can go longer if they think you've been dodgy. You can do it. It's easier under 2. It's easier to do online, but you can certainly reach out to the ATO for help there. We've had some more questions about agency labour hire. It really is its own topic. I could speak for hours there, Frank. So it's just yeah, these labour hires where they say, hey, get your own ABN. It cures all ailments. It's never the case. So the ATO is very, very careful to look at the substance, not just the form. So just because you've got yourself an ABN, and if you're working through a labour hire agency that treats you like an employee, the tax law is really going to treat you as an employee. So that's the overall guidance I can give you on there. Likewise, VJ, we're getting a lot of the similar questions. Medical services can be PSI. It is like any other profession, and but just to say that there are additional rules. So you do have to consider what you're providing there. You have to consider if you meet any of the tests. Um, and that does apply, VJ, to trusts or companies, doesn't matter. These rules apply to ABNs, sole trader ABNs, trusts, companies, any structure you can think of. Hannah's asked, what's the best way to pay a spouse if they work for the business? The best way is to have them join you in the principal work and pay them to do that, or to meet some of the other tests that say, well, this is not ultimately going to be taxed as PSI, so therefore you can pay your spouse. Of course, there is an overall rule that when you do pay your spouse to work in your business, it should be market rates. So if you're hiring someone to do your bookkeeping and you're paying your husband $500,000 a year to do your bookkeeping, that's not going to stand up. So I do just caution you there as well. Um, We've got some detailed questions. Charles, maybe I think they look a I don't want to get into mentioning that because I think you might be giving something away about your business. So I'll probably not deal with you there. We can certainly reach out and have a free consultation on you for a bit of detail there. Don't want to say it out loud. Here we go. So Nav has said if we have declared PSI and subsequently realized it actually wasn't PSI, yeah, again, the opposite of the earlier question, you can go back and amend that tax return. You can say, well, I made a mistake. I've actually got more favorable tax treatment here. Okay. If it's true, that's absolutely fine. The ATO does take a closer look at at amended tax returns, as you can imagine, particularly an amendment that puts you in a better position. But if you got your ducks in a row, you've kept those records at the time, go for your life. We've hit 1 o'clock. We've cleared the questions. We've done everything we came here to do.
Brilliant. Tim, thank you so much. Always a pleasure. This has been a really, really fun topic as well. Super fun. I'm glad we finally got round of it. So, uh, guys, I usually do tend to call everyone afterwards to get a vibe of how they felt about the webinar, but also we do like to take suggestions as well. So if it's more universal, we can't necessarily do career specific, but if you do have a universal topic that we haven't touched on yet, go ahead and respond in the email I send out, some things that you'd like to see. We're more than happy to consider it and plan a webinar if enough people are interested in a specific topic. Thank you all so much for participating today. The questions, if anyone is interested who hasn't put their name down for a chat afterwards, go ahead and put yes, and I'll make sure that I contact you and we can organize something. But yes, for now, we will go ahead and leave it there. Tim, thank you so much for your time and pleasure, everyone. Thank you.
Thank you, Joel, and thank you for everyone who attended and asked your wonderful questions. I'll see you next time.